right. Well, hello, everyone. We're so glad to have you join us today. My name is David Briscoe, Keller Williams Elite Realty here in Oklahoma City. And we also have my friend and cohort in business, John.
Yeah, yeah. Glad
John's,
to be here. Thanks for having me, David. I guess to do a little introduction, I'm with First American Mortgage, so I'm a mortgage expert in the business. Actually, this year will be 17 years assisting people with home loans. And so what that means is I help people on a residential side alongside people like David to get the best financing options, down payment solutions, talk about their credit and those kind of things. So yeah, thanks for having me on the call.
You're welcome. And we met several years ago when I had a client that had you as their lender. And then
Yes,
we
sir.
went to coffee and we just started masterminding together about how we can offer the most value and be personable and just a high level of service to our clients. And so for a long time, we met about once a month, and we didn't
Yes.
talk about how to work together. We just threw ideas at each other. How can we be better? How can we better
Yes.
serve our clients? So that's how
Yeah.
the relationship built, and it's been fun to join you in on all of that. So, well,
Yeah,
let's get
absolutely.
started with our topic today. The topic is everything home lending, and there's been a lot of changes with the virus that has happened and the stay-at-home order, and we just kind of want to alleviate any fears or concerns that people have, and just kind of give them a snapshot of what is going on. So,
Yeah.
you bet. So we had I'll ask you a couple of questions here, John. We got together, we had some things we wanted to go over. So there's been some
Sure.
talk about people. I mean, the economy obviously is affecting all of us, and it will for a little while going on. We look at the numbers of unemployment, we look at the stock market, and that's having an effect on a lot of Americans and Oklahomans. So one of the topics that's come up recently is the difference between forbearance and deference of a mortgage loan. Can you explain a little bit about what that means to us?
Yeah. Yeah. So, I mean, to kind of, I guess, backtrack a little bit on the COVID-19 has just changed the landscape. You and I haven't been able to have some of those meetings like we really enjoyed. And like you said, the topic of discussion kind of alludes to what we're doing today is just how can we add more value? How can we level up our game? And I think we have a handful of live listeners and participants in the Zoom call. So guys, if you have questions, feel free to unmute yourself, pop in and kind of ask a question that David and I can help facilitate for that live. But we've got some stuff that we really wanted to enlighten you on about what's going on. So to speak about what COVID-19 has done a little bit for our business is really it's changed a lot because mortgage companies are concerned of people not paying their payments, which is something we're going to talk about forbearance and some of those payment deferment options. And I guess let's go into that, and then we can come back and speak more about some of the details of COVID-19 and the restrictions and things to be aware of. But forbearance, guys, here's the key that I was telling David. I want everybody to know that's not forgiveness. Forbearance is not forgiveness, and it's different. You can always talk to your lender, or for the realtor partners that are on the call, have your clients talk to their lender if they're having trouble paying their payments or if they're furloughed or laid off from work. But what that looks like a lot of times, let's say if they have a 3-month forbearance to where they don't have to pay their payment for 3 months, well, they still have to pay it. The problem is month 4, that payment's due, payment 3 is due, payment 2 is due, and payment 1 is due. So they have 4 months worth of payments due immediately right there. So what happens is most of the time consumers don't save that money. I kind of say sometimes forbearance is the first step into foreclosure. So consumers really want to know what they're getting into, because as you can, understand, David, having to pay 4 months worth of mortgage payments all in 1 month is a big challenge. And so then if they don't pay that, they now are not just late, they're late by potentially 90 or 120 days that will hit their credit report and just make a catastrophic impact to what that will look like for them. So yeah, it's a big thing. People really need to understand the dynamics of what that forbearance is. So I wanted to be very crystal clear. It's just your payments being deferred, and usually how that works is, say on month 4, all of those payments are due as a whole, as a lump sum.
Yeah, that could be really tight for people thinking that's an escape or a temporary fix for just a moment, and it would really that'd be tough to come up with.
Yes, sir.
For most of us, our mortgage payment is the largest expense of the month.
Mm-hmm.
So if that's $1,000, then you're talking $4,000 to come up with at the end of the 4 months. And like you said,
Yeah.
that just defers the problem. So
Yep.
tell us a little bit about then deference and what that means, because I know some auto loan companies are deferring loans, and also is that an option for people with mortgages?
Yeah, and so each mortgage company is kind of going to be separate and different. That's why I always encourage talk to your loan servicer who you have your mortgage with. But some mortgage companies may say, "Hey, we'll tack that on the end. We'll let you have a month forgiveness here." I'm hearing a lot of differences between companies to companies, but at the end of the day, the big piece to know is it's not forgiven. They're still going to owe the money. It's not like you can get out of paying your mortgage payment because of the virus or because of crisis times. You still owe. The money is still due. It's just a matter of, is it going to be all due in 4 months? Are they going to push it back towards maybe the end of the term? What does that look like? And that's something they want to have really crystal clear conversations with, calling their loan servicer and asking them those detailed questions to see how it would be structured for them personally.
Certainly, you bet. So that's just a matter of making your call to your lender,
Yep.
whoever holds your mortgage, and seeing what assistant programs they have available.
Yes, sir.
It's
Yes,
good
sir.
information, and I appreciate you making the distinction there of deferment versus forbearance. And
Mm-hmm.
we can all at all help it. We want to stay away from the forbearance because that'll eat our
Mm-hmm.
lunch, I think, in the end. Very good. If you've got a question about forbearance or deference, let John or I know. We're going to put this up on Facebook after we're done. And so we'll be tagged in that, and you can find us there and be able to ask your questions there, or you can put it here in the chat in the live video here on Zoom. So our next topic that we wanted to talk about was interest rates. So
Mm-hmm.
we know that last month, end of March, the Feds lowered the prime interest rate. So a lot of people are thinking, hey, that lowers our mortgage interest rates, but there's a lot involved in that, isn't there? Can you explain
Yeah.
how that Fed rate affects home mortgage interest rates?
Yeah, it's great to say it in a basic term. Everybody that's listening, it doesn't affect it potentially. So what that is that's the banking rate. So when the Feds cut the rates, our calls as mortgage lenders we took calls from early morning to late night every day, 7 days a week. It was a wild ride there for that couple weeks. But what they just won't correlate the same. Your mortgage rate could potentially even rise when the Feds drop the rate. So that's correlated to the bond market and what that looks like. And so the key is there. I think what I'd really like to impress most importantly to our viewers and our listeners is that the interest rates, guys, are low, super, super, super low. We're talking historical lows that we're working with. And so, David, for a consumer that wants to buy a house and they want to buy, say, a $250,000 house, that's really what they would like. If rates go up a couple of percentage points, they may have that same type of payment on a $200,000 house. So the cost of waiting, I can't express so much now, is a wonderful, wonderful time to buy. Rates are fantastic. Your money goes a lot further for you because you have a low interest rate. And so the biggest deal is when you see stuff on the media or the news about Feds cutting the rates or mortgage rates online, again, call your local professional. They're going to be really enlightened and have all the details that they're going to be able to go through and kind of talk you through a lot of that.
You bet. And
Great question. Yeah.
Yeah. So I've I've called up and asked, hey, what's the best interest rate today? And you're always hesitant to give me a straightforward answer because there are so many factors that go into that. Credit score is one, what type of loan you're looking at, what price range you're looking at. Can you explain or just give us a couple of things there that affect those, if I were a consumer, would affect my interest rate?
Absolutely. And you, David, a lot of my partners will message that, or especially consumers, they're looking to buy. They're like, well, what's your best interest rate? Well, like you said, there's so many factors like credit score. How much are they going to put down? Are we doing a 30-year, a 15-year, a 20, or a 10-year mortgage? Are we doing a conventional loan with a really high credit score? Or are we doing a conventional loan with a low credit score? Is it a government loan, like if we are working with a veteran and doing a VA loan, or Federal Housing Administration or an FHA loan? So somebody that maybe has a 640 credit score versus an 820 credit score, and the 820 is putting 5% down as a down payment, their interest is going to look a lot different than that person that's doing maybe a 640 score. So there's so much that goes into it. And a piece that also I really like to impress is you got to be really careful with mortgage companies out there. For a lack of better ways to say it, guys, there's a lot of muddied water, I guess is what I like to use the terminology, because mortgage companies may charge processing fee, underwriting fee, document preparation fee, all these things that they'll have, and they may have 6 or 7 fees. So, you get a rate quote online that sounds really good, but they're charging the client $2,500 in fees plus 1 or 2% of their mortgage loan amount. So they may have, I saw one the other day, David, that had $7,600, $7,600 just in the lender cost portion. And so the client said, well, John, at this other mortgage company, it seems like they have a better interest rate. And I said, well, let's look at it. Let's compare line by line, apples by apples. And I said, well, we only have one fee. It's $950. I said, they have $7,600 in fees. I said, so what they're doing is, it's almost not necessarily bait and switch, but it kind of could be considered that, because they get the client, the consumer, on the hook because it sounds like a really attractive interest rate. And then really there's a lot of fees. So clients out there listening, realtors that are listening out there, know that you can get any rate you want. It's just a matter of how much do you want to pay to obtain that interest rate. So that's even more important, to get on the phone with a lender and say, here's different rate options, here's what it looks like, and let us really just get transparent and be very candid with the client and our realtor partner on what that can look like and the opportunities. Another good example, David, the other day I have a realtor partner, and he's new in the business, and he calls me and he says, hey, this deal, my client's deal is going to bust. It's over $500. And I said, whoa, hold on, let's talk about it. Well, let's fast forward, not to go through all the details, but I was able to give them a lender credit for $500 to make up for that. And then the seller got to save $500 to use to other things and not pay as much in buyer's concession. So in a nutshell, that may not make sense, guys. So if you have questions, chime in or type in the comments here, and I can go into more detail or answer it. But the big impression that I want to make is that there's all kinds of options. There's wonderful, wonderful scenarios that you can do to meet the consumer's goal, and what it might be for one person may look differently to another person.
And I have to say, that is one of the reasons I like having you as a go-to person, John, is because
Thank you.
a lot of lenders, especially large ones, and we can talk about that a little bit more later, that
Sure.
won't come up with those resources, won't work with a client to try to figure out how to make something work. And that's so important.
Yes.
And sometimes you're talking about $150,000, $200,000 purchase. Sometimes $500 is the straw that breaks the camel's back for some.
Sure.
That's a real deal. I had one, and it was $150 that was going to break the camel's back.
Yeah.
And so we worked to make that happen for the client, first time buyer in that case. And they were borrowing money from grandma to help for the down payment, and that's all they had. Yep. It was a stretch for them. And so it does feel good to know that we help people get to where they need to be. You were talking about, I'm sorry, I went blank for a second.
No, it's fine. I was going to say on what you said, that's the whole key, guys, for you guys that are listening. Work with an expert. You need, there's like David here. He's a phenomenal realtor. He's been in the business. He knows his stuff. You want to have a good realtor that you're working with. You want to have a good lender that you're working with, not just somebody that you're calling on an 800 number, not somebody that's just trying to sell you on something, but that's there to help facilitate the sale of this transaction and walk you through each step of the process. So that's something I thought on what you just said. I think it's so important that people need to make sure they're aligning with, people that have the right intent, their heart's in the right place, and they know what they're doing.
You bet. And I want to put out a little plug for you because the way you work and the way you're compensated is a little bit different than some people. And you alluded to
Yeah.
that without giving yourself credit a moment ago. And that is, just tell us about that.
Yeah. So good point. For instance, there's a lot of good local lenders. One I come up against quite often, a big home builder uses them as their preferred lender, but every single time I have lower cost and lower interest rate. And then the consumer would tell that other lender, hey, I'm going with John. And then the other lender comes and says, oh, well, wait, hold on. Let me go talk to my management and see if I can get you a better deal. And the consumer says, why didn't you just give me the best deal up front? What do you mean you have to go check to see if you can match this other lender? Why are you trying to take advantage of me in the situation? And a lot of mortgage companies, David, are incentivized. Here's some real transparency for the listeners out there. They're incentivized to upsell the interest rate because the company makes more money in a lot of cases. And here's the real candid piece that I think you were wanting me to get into. Guys, this is real transparent. My commission, I get paid the exact same commission rate no matter the loan program, and it doesn't change. So I'm paid by the owner of my company when the loan closes. I'm not incentivized to sell a higher rate. So I get to see raw pricing. So based upon all those criterias, the things we were talking about, like credit score, loan type, down payment amount, I input all that in and I get to see raw pricing and literally give the consumer full reign on picking what rate they would want, whether they need closing cost help or they want to buy the rate down or just take the best rate that's available. I get to just really and truly put that out there for them without having to be concerned of, well, I have to sell a higher rate or I have to offer this so I make more money. I'm not incentivized that way, but a lot of really good local companies are. And, there's, for a lack of a better way to say it, David, I guess there's a no haggle environment with me. I just give them the best deal up front and they love me for it because, when that other lender maybe they had quoted with before that shot them a 0.5% higher on interest rate, they really feel like they were taken advantage of, which they were. And so I hope
And
that answered your question.
you bet. And I think it's important for people to know that they can shop for
Yes.
a mortgage, just like
Yes.
you're shopping the best deal for a car, or you're something even much smaller than that. You're looking for a new TV. So you want to go to check 3 or 4 sites to see who's got the best price for your TV. And you
Mm-hmm.
can compare those. And what I like about you is you make it simple.
Mm-hmm.
And it's just straightforward and it's lined out. Now, a lot of people
Yeah.
are concerned about having their credit checked for those
I was just thinking that. Yeah.
pre-qualifications like that. So what does that look like for the consumer? How does that affect them? Sometimes they're afraid to shop because they're afraid that will ding their credit too much.
Yeah, and you're absolutely correct. So I'm glad you brought that up. You read my mind. We're on the same wavelength, my man. And so a lot of mortgage companies will say, don't go out and pull your credit with anybody else. Well, really, because they don't want to lose the deal. Case in point of what I just described earlier, I got the client 0.5% lower than what that lender was offering. But the credit reporting agencies, Experian, Equifax, and TransUnion, they want to make sure that the consumer doesn't have too many inquiries in a 12-month period. So you don't want a consumer to be out there that's going and getting a credit card in January and an auto loan in March and then another credit card in July, et cetera, et cetera, et cetera. But if you're shopping for a mortgage and you shop with, say, your bank and the mortgage company that the home builder or realtor says you've got to use, and then maybe you shop around, you do your research, like you can look up ratings and reviews, for instance, on me, and you do your research, find who maybe you think you might like. So you shop with, let's say, 2 or 3. You get much more than that. Sometimes it can get excessive and just overwhelm you. But say you have a couple good people that you check with, that's being a smart consumer. So you're able to have your credit checked within that small window because you're shopping for a mortgage. And yes, they're separate inquiries, but the bureaus are going to score that knowing that the consumer is shopping around, being a smart consumer, shopping with several different companies, and it won't ding. Plus, credit inquiries are such a teeny piece of the actual calculation and the true overall of your credit score. But
So,
yeah, shop around, people. It's okay.
and in other words, yeah, it may affect it's a little tiny effect. However, but if you're talking about $7,500 worth of bank fees
Oh yeah.
versus 2,000 or something, then is that really worth, a small ding on the credit by a couple of points? So,
Yeah.
and a mortgage expert like John, I know, is going to be able to guide people through that and say, no, this is exactly how this
Right.
will affect. And unfortunately for the consumer, there's so many behind the scenes things that happen that we're not always aware of, and it's just kind of the way it is.
Yeah.
Nancy, did you have a question at all?
She popped up on the screen. She may have just.
Yeah. All right. I'll just mute you just in case. If you got a question, Nancy, let us know and we'll get to that real quick.
I love everybody that's showing up here. Thanks everybody for joining in. I was just scrolling through here on the screen and seeing everybody that kind of popped in to join us. That's awesome. So please, guys, if you have questions or curiosity, there's realtors that are on here. There's clients that are on here. There's investors that are on here. So if you have something you want us to talk about, you can kind of pop in and unmute and say, hey guys, hold on, I want to ask you something. But, going back to what you were saying, David, it's like, I talk to so many clients like, well, John, I don't want you to pull my report. I'm already with this other lender. And I say, well, Mr. and Mrs. Homebuyer, if I could save you thousands of dollars and get you a lower interest rate and change your payment, wouldn't that be worth at least us having a conversation and taking a look at it?
Right.
And I think that's a good transition way if you're talking to your client and they're telling you that you can kind of help them. Because keep in mind, like David, like yourself or other realtors that are on the call, you guys are experts. And so it's your duty to make sure if they come to you qualified. I hear a lot of realtors say, well, I don't want to rock the boat. I don't want them to not use me because I'm pushing them to check around. Well, guys, here's the real deal. You owe it to them because you're an expert in the business to align them with other experts in the business. Meaning if your client knew that you could go elsewhere or get them to go talk to somebody elsewhere and save a bunch of money and they found out that you didn't do it, I can almost guarantee you that client's going to be pretty upset. So be the expert that you are and make sure and have confidence when you talk to your client. Hey, Mr. and Mrs. Homebuyer, I'm going to set you up with Mr. Mayhue. It doesn't matter to me who you use, but I know he'll close on time. I know he'll have the lowest fees and he'll get you the best interest rate, plus red carpet service from A to Z with his team. And Mr. and Mrs. Homebuyer, by me being an expert in the business, I want to make sure I get you connected to the best people, just like I do for insurance. I give out several insurance referrals, and it doesn't matter to me who the client uses for insurance, but I need to know what that number is going to be. And I want to make sure that they have options. And if I can get them connected to somebody to save them a considerable amount of money, then, that's our job to do that, to make sure that we get them aligned with the best.
Certainly. That's great info, and I appreciate it, John. We were talking earlier this week, and we were kind of reviewing what we wanted to talk about on this call. And
Yeah.
in regard to the COVID and the way that's changed the industry, a lot of title companies are even bringing the paperwork out to the cars, and we're
Yeah.
working on doing more digital signing and those kinds of things. So you had a client, or you were telling me of a client who was pre-qualified in late
Yes.
February or early March, found the house that they wanted, and then they're ready to put in that offer and send that pre-qualification letter with their offer. Tell us what happened with that deal.
Yeah. So this is somebody I've been working with for a long time. And like David said, the realtor partner, and I have an ultimate piece of advice for all the realtors out there in dealing with this. So be on the hook here to make sure I say that in a few. But it was a lower credit client. Well, with COVID-19, guys, and I can speak to some of those changes, credit restrictions have gone up all across the board for all lenders in some capacity, one way or another. Some, like Chase, they want a 700 credit score and they want 20% down. They even on clients that were in processing, I had to personally come in and pick up several Chase clients and kind of do a savior loan for them because Chase said, hey, we're pulling out and we don't even care that you're closing next week. We're declining the loan now. And so it's just a tragedy, right? And seeing some of that. But with this particular client, they were building a house and come to find out their credit wasn't, or no, I'm sorry, there's two different deals that had this scenario. The one I told you about, the realtor called and said, hey, we want to make an offer. So I pull up the file. Well, their credit score doesn't qualify anymore. I didn't even know they were still looking. This was from months ago. So the piece of advice that I would say, we're still able to make it work. And we found a program that we were able to take care of that client. They just didn't qualify for the initial one they wanted. So my big piece of advice that I was saying I wanted to get to was that make sure that you guys as realtors are communicating with your lenders, because a lot of things have changed. If somebody qualified 6 months ago or 3 months ago, they may not qualify anymore, or it may look differently. And so make sure communication's key, right? Guys,
Exactly.
make sure you're communicating with your lender partners, because things are changing. Stuff changed. Even we had a big bulletin on a loan program that changed on Monday. This stuff's happening every week. So be in real close alignment with your mortgage expert. Just say, hey, we're looking at houses this weekend. I want to make sure nothing's changed for their file. I think that's an important conversation to have right now, that you didn't really have to think about having
Right,
months
because most
past.
people were going to think, hey, I'm pre-qualified, I'm good to go. Well, every
Hmm.
lender is trying to navigate, and investors for lenders are trying to navigate this economic environment. And so they're all
Yes,
grabbing at straws in a way to make sure that they can do that right and not get in over their head. So it is a good idea.
absolutely.
Just check with your people and stay
Yeah,
in touch with them. Hey, we're running close to our time here, and
good.
I wanted to tell us, just give us a little snapshot of what the market is doing as far as real estate. I just checked these numbers today. So if you or somebody you know is considering making a purchase, um, so in the last 3 days here in central Oklahoma, we've had 258 brand new listings come on the market. This is an
Wow.
incredible number. There are 80 of those 258 have gone under contract in only those 3 days. So
My
properties
goodness.
came on the market on Monday. 31% of those that came on market on Monday are under contract. They're off the market. That is a huge number. And a total of, in the last 3 days, 371 properties have gone under contract, or they're categorized in our system as pending. So as you can see, there are more properties that are being sold and coming off the market than there are coming on the market. So if you are a homeowner that is wanting to or considering selling, this is the time. This is an incredible seller's market right now. It is really strong. And I know there may be some concerns about the virus. I do have plans in place, some systems in place to keep people as safe as we can when we're showing homes, and whether if you're a seller. So know that we're taking that seriously, and want our clients to be as
Good.
safe as possible. All
Well,
right.
David, it's too. I'll tell you something. It's everybody's all stuck in their house right now, right? Like today, I'm actually in my room. I am working remotely this afternoon, and so it's so uh, with families that weren't used to being together and the kids being home, school's out. They look around their house and they think, well, oh man, I'd really like to have whatever it may be, right? I talked to 3 clients yesterday that were inquiring about doing pools. So obviously they're stuck at home. They're like, it'd be really nice to have a pool in the backyard or whatever it is. You're figuring these things out. So now, I mean, guys that are listening out there, you hear David talking about it being such a good time. You hear me talking about how interest rates are good. I just would like to hit on, now might be the time to go find you a new house that maybe has things that your house is lacking. So
And that's a good question and a good thought, because some people say, well, it's a seller's market. I'm going to wait, or I'm going to whatever. So if your home is
sure.
under that $300,000 mark, you're in a seller's market. So you're going to get more for your money. If you're going to cross over that threshold, and every day that's shifting, where we go from more of a seller's market to a buyer's market or a balanced market, you may be saving money on the upgrade for your home. And so those are important numbers to
Yeah.
look at too. So there's a lot of
Good.
ways, a lot of factors that go into home purchasing. And as John said, you really want somebody on your team, that on your side, that's really advocating for you. And that goes with a lot of people. It goes for the lender, it goes for the realtor, it goes for the inspectors, it goes for the title company, all these people that are the wheels behind making a new home purchase happen. It's important to have the right people. And that's why I appreciate John. He's a great go-to, and I trust him because he's done
Well, thank you.
great stuff for the clients that I've had. And we look forward to doing more because we know the value. And I think we put ourselves in the client, in the consumer's shoes. How do you want to be treated? And
Yes. Yeah.
and that's just important. So Is there anything else we wanted to go over?
I don't know. I kind of want to see if, I don't know if you're able to unmute people or if they can unmute themselves. We've got a lot of people in here. Anybody have any feedback or have any questions that you'd like to ask or us to talk about? We've got a lot of viewers that are in here. So if you guys want to unmute your line, we'll kind of give you a minute or two to hop in and ask maybe something that's on your mind, or share feedback, or whatever you'd like. So
yeah, so you could do that in the chat, or you can unmute yourself. I could unmute everybody on my end, but just in case somebody's at a place where they don't want to be, I'm a little cautious on wanting to do that.
Sure, that's a good point. Anybody out there have any questions that's watching us live? And like David said, we're going to post this to Facebook, and anybody that is watching live, share it around. Hopefully we brought some good value. Our desire is to bring insight and to bring value to the marketplace of other people, that if we're able to reach one person, like we've talked about, David, to be able to help serve, then that's awesome.
You bet.
Anybody out there? Nobody may want to talk. And I think it's awesome. I appreciate everybody hopping in to listen. But anybody have anything they want to discuss?
I just would say thank you guys very much for putting this together and for taking the time to contribute. I know there's a lot of moving pieces in the real estate market right now, and I appreciate you guys kind of giving some clarity to that. I just talked to you, John, the other day about
Yes.
wanting to get a second mortgage and move some things around, and the best way. And so I appreciate you always being quick to answer a question, and always being a good lender and a good friend. And so I appreciate that. And then you guys just contributing value to everybody. I'm excited to see you guys do this. I hope you do more.
Well, I'll give you a plug in that my friend here that's commenting, Josh, is doing a new it's a YouTube channel, podcast type of deal. You'll have to put that in the comments when we share this on Facebook, because that's a big value that you bring that I think a lot of people would enjoy having. So thanks for tuning in. I appreciate the kind words, and
you bet.
Yeah, it's good to give insight out there. What else, guys? What other thoughts?
We're going to have to wrap it up for right now, because this is going to end automatically on us. It's a time thing. So look for us on Facebook, David Briscoe Realtor. I'll post it there. And then John with First American Mortgage. And we thank you guys for joining us. And you may have questions that come to mind after this call. And so feel free to reach out, share it with your people, your sphere of influence. And we're just delighted to be with you guys. Thank you, John.
And I saw one of our consumers, they unmuted and then they muted back. So I bet they may have had something. So we'll definitely have them put that in the comments. Jeannie, I saw that you were on my screen here, and I saw that you came off mute and then back on. So post in the comments what maybe, or go ahead if you want to say something real quick. I know we'll say, I guess, bye-bye. And thank you to everybody first, in case we get cut off.
Information.
Good. I'm glad you found value in it. Thank you for joining us.
Thank you, Jeannie. All right. Thank you guys so much. And we'll look forward to doing this again, I hope, John.
Yes, absolutely. We will.
All right.
Thank you, David.
Bye-bye.